Hey seniors, stop scrolling right now because what I'm about to tell you could directly impact the money landing in your bank account this month. A brand new banking rule has just gone into effect across the United States, and millions of Social Security recipients have no idea how it could change the way their deposits are processed, accessed, or even held by their bank. We're talking about your retirement income, your monthly check, the money you worked decades to earn and depend on every single month. Here's what's making people nervous. Some banks are already updating their policies quietly, without sending a single notification to their customers. And if you're on Social Security, SSI, or SSDI, this could affect when you see your money, how you access it, and what happens if there's a processing delay. The worst part? Most seniors won't find out until it's too late, until they go to pay rent, buy groceries, or cover a prescription. And the funds just aren't there like expected. But here's the good news. You're watching this video right now, which means you're about to get the full breakdown before it catches you off guard. I'm going to walk you through exactly what this rule means, which banks are affected, and the simple steps you can take today to protect your deposit. If this matters to you, and it should, smash that like button right now so more seniors see this before it's too late. Let's get started. Now, before we get into everything, I want you to take a deep breath because while this is serious and you absolutely need to know about it, there are steps you can take to protect yourself. That's exactly why I'm here today. I've spent a considerable amount of time researching this new banking rule, what it means for everyday Americans who rely on Social Security, and more importantly, what you can do right now to make sure your money is safe and accessible when you need it. So let's walk through this together, step by step, in plain English. No confusing financial jargon, no overwhelming legal language, just the real facts that matter to you. Let's start at the beginning. The rule we're talking about stems from a series of updated banking compliance regulations that financial institutions across the country are now required to follow. These changes affect how banks handle incoming electronic deposits, particularly government-issued payments like Social Security, SSI, and SSDI. For years, these types of deposits were treated differently. They had special protections that most people didn't even know existed. But with this new rule now fully in effect, some of those protections are being reinterpreted, restructured, and in some cases delayed in how they're applied from bank to bank. Here's what that means in practical terms. When your Social Security check hits your bank account, there have always been rules protecting that money from being seized for certain debts. That protection is still technically on the books at the federal level. However, the way individual banks are now required to verify, document, and process those protected funds has changed. Some banks are taking additional time to flag and separate Social Security deposits during what they're calling a compliance review window. During that window, which can last anywhere from 1 to 3 business days depending on your bank, your funds may show as pending or under review, rather than immediately available. Now, for most people in normal circumstances, a 1 to 3 day delay might feel like a minor inconvenience. But for seniors living on fixed incomes, a delay of even 24 hours can mean the difference between paying your electric bill on time, picking up your medication, putting food on the table, or falling behind on rent. This isn't a small matter. This is about the financial dignity and security of millions of older Americans who have earned every single dollar of that Social Security income. And the fact that banks are rolling this out quietly without proactively notifying their customers is exactly why we need to talk about it today. So which banks are affected? The short answer is most of them. Any bank that operates under federal FDIC insurance, which covers the vast majority of banks in the United States, is required to comply with these new standards. That includes the big national banks like Chase, Bank of America, Wells Fargo, and Citibank. It also includes regional banks, community banks, and credit unions that operate under similar regulatory frameworks. The specifics of how each institution implements the compliance review window can vary, which is why your experience might be slightly different from your neighbors, even if you both bank at similar institutions. Credit unions, interestingly, may have a slight edge here, because many credit unions operate under a more member-focused model and have a bit more flexibility in how they apply certain compliance windows. Some of them are processing Social Security deposits with less delay than traditional banks. If you've been considering switching from a regular bank to a credit union and you haven't done it yet, this might be one more reason to look into it. But don't make any sudden moves just yet. We'll talk more about that in a moment, because there are some things you need to check before making any changes to where your deposit is sent. Now let's talk about what this rule does not affect, because I want to be really clear about this. Your Social Security benefit amount is not changing. The date your payment is scheduled to be sent from the Social Security Administration is not changing. The federal government is still depositing your money on the same schedule it always has, based on your birthday and whether you receive Social Security Retirement, SSI, or SSDI. What's changing is what happens on the bank's end once that deposit arrives, and that is entirely within the bank's control, not the government's. This is an important distinction because there is a lot of misinformation floating around online right now. Some people are claiming that the government is withholding payments or that Social Security is running out of money faster than expected, and they're trying to delay payments to manage the shortfall. That is not what's happening here. The Social Security Administration is operating independently of these banking compliance rules. The issue is entirely on the private banking side. And that's actually somewhat reassuring because it means there are things you can do to navigate around it. Let me tell you about some of those things. The first and most important step you can take right now is to contact your bank directly and ask them specifically about their policy regarding Social Security, direct deposit holds, or compliance review windows. Use those exact words. Ask them how long funds are typically held before being made fully available, whether they have any notification system to alert you when a hold is placed, and whether there is a process to have verified Social Security deposits flagged as priority releases. Many banks do have such a process, but they don't advertise it because, frankly, it requires a little bit of effort on their part. When you call your bank, and I strongly encourage you to call, rather than trying to navigate this through an app or a website, ask to speak with someone in the accounts department or the direct deposit services division. The frontline customer service representatives are often trained to give general answers, but the people in those specialized departments will actually know what's happening with the new compliance rules and can tell you exactly what your account's status looks like. Don't be shy about asking. This is your money, and you have every right to understand what's happening with it. The second thing I want you to think about is your financial buffer. I know that for a lot of seniors on fixed incomes, the idea of keeping a financial cushion in the bank is easier said than done. But even a small buffer, even just enough to cover 3 to 5 days of essential expenses, can make an enormous difference when you're facing a short hold on your deposit. If your Social Security check is your only income and you're living dollar to dollar from one deposit to the next, a 3-day compliance window can feel catastrophic. So if there is any way to slowly build up even a modest buffer in your account, that's one of the most protective steps you can take. Some seniors have found it helpful to speak with a HUD-approved housing counselor or a benefits counselor at their local area agency on aging about strategies for managing tight cash flow around deposit dates. These counselors are free of charge. They understand the specific financial challenges facing seniors, and they can often connect you with emergency assistance programs that can help bridge short gaps if your bank does put a hold on your funds. The phone number for your local area agency on aging is easy to find. Just search for it by your state or county name, or call the elder care locator at their toll-free number. The third thing I want to address is direct deposit itself. If you are still receiving a paper Social Security check in the mail, please listen closely. Paper checks are even more vulnerable in this new regulatory environment because they go through an additional layer of processing when you deposit them. A paper check from the Social Security Administration, when deposited at a bank subject to these new compliance rules, can face holds of up to 5 business days in some cases. That's nearly a full week. If you haven't already switched to direct deposit, now is really the time to do it. Direct deposits, even with the compliance review window in place, still tend to be released faster than paper checks. To set up direct deposit for your Social Security payments, you can do it directly through the Social Security Administration's website, which is ssa.gov, or you can call their main number and do it over the phone. You'll need your bank's routing number and your account number, which you can find on a check or by calling your bank. The process usually takes 1 to 2 payment cycles to go into effect, so your next 1 or 2 checks might still come by mail, but after that you should see direct deposits going forward. It's a straightforward process, and the Social Security Administration's phone representatives are generally very patient and helpful. Now, there's one more thing I want to spend a little time on, and that's the emotional side of all of this. Because I've been hearing from a lot of seniors lately who are feeling genuinely anxious about their financial security, and I want to acknowledge that directly. When you're retired and on a fixed income and you've done everything right your whole life, you worked, you paid into the system, you saved what you could, it can feel deeply unsettling when it seems like the rules are changing without your input and without adequate warning. That frustration is completely valid. You deserve better communication from your financial institutions. You deserve transparency, and you deserve to feel secure about the money that is rightfully yours. But here's what I also want you to hold on to. You are not powerless in this situation. Every step we've talked about today, calling your bank, asking specific questions, building a small buffer, switching to direct deposit if you haven't already, these are all things within your control. And knowledge is the most powerful tool you have. The fact that you're watching this video right now, that you took the time to find out what's going on and educate yourself, that already puts you ahead of millions of other people who have no idea this is even happening. I also want to mention something about your rights under federal law because this is important and not enough people know about it. The Electronic Fund Transfer Act and the related regulations under Regulation E provide specific protections for consumers who receive electronic deposits. These protections include the right to receive clear notice of any holds placed on your funds, the right to dispute a hold that you believe has been placed improperly, and in some cases, the right to seek damages if a bank fails to follow proper hold procedures. If your bank places a hold on your Social Security deposit without proper notification, you have legal grounds to dispute that hold. And in many cases, simply mentioning that you are aware of your rights under Regulation E is enough to prompt a bank to expedite the release. You can file a formal complaint about your bank's hold practices with the Consumer Financial Protection Bureau, known as the CFPB. Their website is consumerfinance.gov, and they have a very straightforward online complaint process. You can also file complaints with the FDIC directly and with your state's banking regulatory authority. These agencies do take complaints seriously, especially when they involve vulnerable populations like seniors on fixed incomes. And a pattern of complaints about a particular bank's hold practices can actually trigger regulatory scrutiny of that institution. So don't hesitate to use those channels if you feel your rights have been violated. Let's also take a moment to talk about what to watch for in the coming weeks and months. This regulation is still relatively new, and banks are still in the process of fully implementing it. That means the situation may continue to evolve. Some banks may adjust their compliance review windows as they get more feedback from customers. Some may find ways to process verified government deposits more efficiently. Others might tighten their policies further. The best thing you can do is stay informed. Check your account online or by phone around your expected deposit date each month. If you notice anything unusual, a longer than expected pending period, an unexplained hold, a lower than expected available balance, call your bank right away and ask for an explanation in plain language. Also, keep an eye on communications from the Social Security Administration itself. They do occasionally send letters and notices about changes that might affect your payments, and it's important not to ignore those. If you receive a letter from the SSA that you don't understand, don't just set it aside. Call the SSA directly, or take it to your local SSA office, or bring it to a trusted family member or advisor who can help you understand what it means. Staying engaged with your accounts and your benefits is one of the most protective things you can do in this environment. One final thing I want to address before we wrap up today is the question of scams. Anytime there is confusion and anxiety around banking rules and Social Security, scammers take notice. They prey on that uncertainty. In the coming weeks and months, you may receive phone calls, emails, or text messages from people claiming to be from your bank or from the Social Security Administration, telling you that your account has been flagged, that your deposit is on hold, or that you need to verify your personal information to release your funds. I want to be as direct as possible about this. Hang up. Delete the email. Do not respond to the text. Neither the Social Security Administration nor your bank will ever contact you out of the blue and ask you to verify your Social Security number, your bank account number, or any other sensitive personal information over the phone or via text or email. If you receive a contact like that and you're genuinely concerned about your account, hang up and call the official number on the back of your bank card or on the official SSA website yourself. Never use a phone number given to you by someone who contacted you unexpectedly. Scammers are sophisticated and they know exactly how to take advantage of moments like this one when people are already feeling uncertain and worried. All right, let's bring everything together. A new banking compliance rule is now fully active across the United States, and it is affecting how quickly Social Security deposits become available in your bank account. Holds of 1 to 3 business days, and sometimes longer for paper checks, are becoming more common as banks implement compliance review windows on government deposits. Your benefit amount and your payment schedule from the SSA are not changing. The issue is entirely on the private banking side. You can protect yourself by calling your bank to ask about their specific policy, knowing your rights under federal law, building even a small financial buffer if at all possible, switching to direct deposit if you haven't already, and staying alert to scams that will try to exploit this moment of confusion. You worked your entire life to earn this money. You paid into this system for decades. You deserve to have it accessible when you need it, without confusion, without delays, and without fear. And as long as you stay informed, stay engaged, and know what questions to ask, you will be in the best possible position to navigate whatever changes come your way. That's what this channel is all about, making sure you have the real information you need in plain language so you can protect yourself and your financial future. If this video helped you today, please share it with someone you know who relies on Social Security because they need to hear this too. We'll see you in the next one.